I affirm the resolution that the United States federal government should abolish the mortgage interest deduction. A definition: what is the mortgage interest deduction? Basically, it is a tax write-off on your income taxes that is proportional to the interest that you are paying for your mortgage. So essentially, people who are homeowners get to write off money from their income taxes. They don't have to pay as high income taxes if they own a house. And if you own an expensive house, you get to write off even more money from those income tax deductions. So we believe that this plan should pass as soon as possible, and you should be weighing this round on net benefits. What does the most amount of good for the most amount of people, like within the US, I guess. So we have two advantages, and I will be getting into them now. The first advantage is that eliminating the mortgage interest deduction would give more money to social welfare programs. There's a few things we can see in the status quo. The first thing we can see in the status quo is that social welfare programs are funded by income taxes. A lot of the most important social welfare programs within the United States, like Medicare, Medicaid, Social Security, and food stamps, are all majority funded by income taxes. The second thing we can see in the status quo is that social welfare programs do good for people. Programs like Medicare give people the health care that they need. They enable low-income people to actually go to checkups, to catch that cancer tumor before it gets really bad, to be able to go get that essential life-saving surgery without having to pay a ton of money out of pocket. And programs like food stamps prevent families from literally going starving. The third thing we can see in the status quo is that these social welfare programs, while they do good, they could be a lot better. While all the people who are on food stamps are definitely benefiting from it, 38 million people in the United States are food insecure despite food stamps. This shows that these programs help, but they don't reach as far or as deep as they should. Furthermore, about 8.6% of people in the United States don't have health insurance despite programs like Medicare and Medicaid. And this is because these programs, again, are not far-reaching enough, because some people are low income enough to not be able to afford health insurance, but not low income enough to qualify for programs like Medicare. So this means that these people are not going to the doctor to treat their illnesses. They're neglecting their health problems, and they're lowering their probability of survival in a long, happy, healthy life. The fourth thing that we can see in the status quo is that mortgage interest deductions take away money from these programs. According to an analysis, it is predicted that mortgage interest deductions would take away $900 billion over the next decade in income taxes from these programs. This is huge. This is so many people that could be on food stamps that are not on food stamps, that could be on Medicare that are not on Medicare. And this is so many of these programs that could be better that are not going to be better simply because of the mortgage interest deduction. So what happens when this plan passes? The first thing that happens is that the mortgage interest deduction no longer exists. The second thing that happens is that this is a $900 billion injection into these social programs because the country is making more money from income taxes. The third thing that happens is that social programs within the United States increase in quality. This is because these programs can A, serve more people. They can be more far-reaching. The threshold for being able to qualify for food stamps and Medicare will be lower. But B, for the people that actually are on these programs can now offer more to them. Food stamps can now allow you to buy more food or healthier food. So the impact of this is you see a decrease in the impacts of poverty, not only because people are no longer food insecure, people are no longer not able to access healthcare, but these programs are now better, allowing these people to have more disposable incomes and decreasing the effects of poverty in that way. Moving on to the second advantage. The second advantage is that eliminating the mortgage interest deduction would incentivize the development of lower priced homes. There's a few things we can see in the status quo. The first thing we can see in the status quo is that people take out bigger loans for more expensive houses. The second thing that we can see in the status quo is that mortgage interest deductions are the function of the size of the loan or the interest rate that you take out on a house. So functionally, this means that the more expensive house you get, you'll have a proportionally bigger deduction. The third thing we can see in the status quo is that this incentivizes the building of luxury housing. This is because middle and high income people are incentivized to take out a very big loan and opt to buy a really big house that they may or may not need in order to get a better deduction on their taxes. The fifth thing we can see in the status quo is that suppliers of housing adjust to meet this demand for luxury housing. So this means that they are less likely to build smaller housing units or apartment buildings, for example, and they are far more likely to build luxury housing that not only takes a lot more natural resources, that destroys a lot more land in order to build it, that leads to urban sprawl, that leads to like commutes and smog, etc. But it makes it the housing market less accessible for low income people. So what happens when this plan passes? The first thing that happens is that you get rid of the mortgage interest deduction. The second thing that happens is you see less demand for expensive luxury housing. This is because there is no longer an additional incentive for anybody to get luxury housing. If you don't need luxury housing, you will not be demanding luxury housing, and we'll see a decrease in the demand for it. The third thing that we see happen is that the supply will adjust to supply less luxury housing and more moderate or like low-priced housing. The fourth thing that happens is that developers make housing more accessible to lower and middle class people because they're likely to be more dense housing developments, smaller housing developments. And the fifth thing that happens is that we see a positive impact on the environment because when housing is dense and small, not only are you chopping down fewer trees to build a house, but you are also making it so that these areas are condensed in urban centers that are more likely to have public transportation rather than like mansions out in the suburbs that cause people to like drive really far to work and that like decrease the air quality, for example. So the impact of this is we see an increase in access to the housing market as well as positive environmental impacts. So for all those reasons, I urge a government ballot. Thank you.
Panel would like to thank the Prime Minister for the eloquent remarks, and now I call upon the Leader of the Opposition to deliver the second constructive speech of the round, not to exceed 8 minutes with, we're on the West Coast, 15 seconds of grace. Hear, hear.
Sorry, my mic was not on, but I'll be the Leader of Opposition. My name is Cheryl Chen, and the order is just going to be 2 arguments and then case, affirmative case. All right. Katie and I strongly negate the resolution the United States federal government should abolish the mortgage interest deduction. Our first disadvantage is that of wealth creation. The thesis of this disadvantage is essentially that the deduction has helped millions of families each year save up the money to buy their first or second house, which is a key part of the mortgage deduction, which I'll talk about later. But either way, it's key for people to buy houses. And in America, housing is like one of the biggest reasons that a lot of people are not able to like accumulate wealth and pass it down to like to their children. And this is key for like just like income stability and generationally as well. All right, so the uniqueness or what's happening in the status quo. First is that the tax deduction helps people buy homes without facing as much debt. The A sub-point is that the mortgage interest deduction is a tax incentive for homeowners as the affirmative. Also say this itemized deduction allows homeowners to count interest they pay on loan related to building, purchasing, or improving their primary home against their taxable income, lowering the amount of taxes they owe. But the B point is that high interest in mortgage makes it unrealistic for many families to buy a house. This deduction saves thousands of dollars, and this can be a huge fraction of people's yearly income. And this is especially considering the fact that houses in America are like hundreds of thousands of dollars. Even a interest rate of like 0.06% is a huge percentage of a normal average American family's income. But the second point is that nearly 300 million tax filers wrote off a collective $273 billion in mortgage interest in 2018. The links. First is that this would be a huge barrier to wealth creation. The A point is that homeownership is often viewed as a way to promote the accumulation of individual like nest egg as long as home prices are stable or increasing. A homeowner as opposed to someone who's renting out and paying money to a tenant automatically builds their net wealth with each successive mortgage payment. Home equity can be used to make improvements to the house, finance college expenses, or be converted into income for retirement later in life, among other things. Homeownership also provides the opportunity to build or improve credit scores, and as a result, a homeowner may have access to credit cheaper than a renter. The B point is that, like, again, I cannot stress enough the impact of home ownership, because like homes are the most expensive thing that people will ever pay for in their lifetimes. And also homes are like, you really can rely on homes to get more expensive. So if you are able to buy a home, you're able to accumulate a lot of wealth. Also, this is especially important for poor people because they're more likely to get high interest loans. So it benefits them the most, obviously, because of like discriminatory practices and banks trusting them less, you know, like, and this also includes racial bias, not just like class, but also, okay, so that leads us to the impacts. The first is that of wealth. And this is the internal link to all of their arguments about unemployment, food stamps, etc. Because ultimately, like, you can have as many food stamps as you want, but like you're still only going to be able to like buy really cheap, low quality food. But if you have wealth, you can invest that, right? The first step is buying a home in America. Like, it's a really important thing. But also, secondly, is that this is key to democracy, and which is another impact of wealth. The researchers have found that homeowners are more likely than renters to belong to non-professional organizations, knowing the head of their local school board, U.S. House representatives, vote in local elections, etc. So this also means more minority voices being heard, but also this is also good for democracy because oh yeah, there's just like research of all the benefits of homeownership, like less crime in those neighborhoods versus neighborhoods where everyone is renting. Thus, that leads us to our counterplan, which is alternative policy we propose. Our counterplan is the United States federal government should reduce the maximum mortgage principal eligible for deductible interest to $500,000. The background is basically right now, the maximum price that you can get a deductible interest on is $750,000. And this is for first or second time homeowners. So we're going to be reducing that substantially. First, that spending would also increase the price, the amount of deductions people are receiving. When in 2017, when we had the law that reduced the maximum eligible mortgage principal eligible for deductible interest from $1 million to $750,000. This led to the number of taxpayers who take the mortgage interest deduction fell from 34 million people to 14 million people. So it's obviously huge amounts of like swaths of money that are going back to the government that they can pay off in deductions. And part of our solvency is that this money would go into those deductions so more people can buy homes. We would widen these benefits and increase cash flow into the government. But the third point is that we estimate that capping the home mortgage interest deduction to a mortgage debt of $500,000 would raise $319 billion over the next decade. All right, let's respond on the affirmative case. So I have a few problems with the argument about Social Security, Medicare, and all this like social welfare net. And I have a few reasons for that. First of all, is that all the benefits they talk about, like unemployment, food stamps, those are not even funded by the income tax. That's funded by the payroll tax. So this would have effectively no effect on like Medicaid and on like food stamps and all the things that they're talking about. Like, these are two entirely different like banks of money that they're pulling from. But also, secondly, is that because we already have like a massive deficit, it's not going to lead to any surplus in spending. If anything, that's just that money is just going to be used to pay off the deficit that we have right now. But the third point is that Congress has to appropriate it, and Congress would not appropriate because Republicans have already shown a huge intention to veto it. For example, you can look to the fact in 2017 when we reduced the deduction to $500,000, the money did not go to Medicare, right? That money went to increase like the amount of deductions that people receive. And so that means that they can't fiat that it's going to go to Social Security because Congress has to appropriate it, and Congress won't appropriate. This is also proven by the fact that like Texas governors have literally like filed lawsuits against Medicare and Medicaid. Obviously, they're not going to like pour billions more dollars into it when they're so ideologically opposed to social welfare. But also they talk about how people are more likely to build luxury housing. This, like, the entire premise of this argument is very flawed. They don't have any warranting except for the logic, which I'll attack right now. First of all, is that it's unlikely that they're really going to be build like that much of a luxury house because we're capping it at $500,000 under our counterplan, so our counterplan stalls. But either way, secondly, is even if you buy that you can like build a luxury house, which sure you can buy a luxury house with $500,000 in some areas, that doesn't change the fact that people are going to be buying luxury houses, right? The deduction is not the thing that's making people buy luxury houses because either way you have to pay cash up front. And like if you're going to build a luxury house or buy a luxury house, you're going to buy it anyway. You're not going to be stopped by a deduction. All right. They also, yeah. Okay. So also housing is the entire. So yeah, this on their second argument, luxury housing. But going back to their first argument, housing is also the internal link to all these good things. I tell you that. Okay, and also this is especially true among, like I said, like minorities. Housing is like often a huge barrier to like having like healthcare and things like that. But also, okay. Okay, so yeah, so basically, when we're weighing the impacts, the negation is better at addressing the root cause, which is that people they don't even have the money to invest in the first place. Because if you have no money to invest and you have nothing that is like going to increase in price, like you're really not going to be able to keep up with inflation in America, which is increasing rapidly, especially like with interest rates, which are also increasing rapidly in 2022. And this is the root cause for like all the things that they're talking about. Ours is a prerequisite, so it's a negation ballot.
Okay.
We'd like to thank the Leader of the Opposition for their eloquent remarks, and now call upon the Member of Government to deliver the third constructive speech of the round, also not to exceed 8 minutes with 15 seconds grace. Hear, hear.
Thank you, Rana. Sorry, I almost accidentally started without hearing a little spiel. So I'm Kai Taigen. I'm the second speaker for the government, and I will start my time now. So beginning on the top of opposition case, their first contention is about like increasing the rates of people buying homes, right? And what they say at the very beginning of this is that the deduction helps people save to buy their first house. So just think about this. This is a deductible tax deduction on mortgage interest, which is what people who already own homes pay. So the idea right off the bat, this is going to help people who are not already homeowners save money to buy up a house, just doesn't make sense. Like you need to be already paying mortgage to benefit from that tax, and for that you need to actually get like a house. And so right off the bat, this is not expanding credit to people who aren't homeowners, which seems to be like their main argument in this round. And so we can test the idea that this is going to increase homeownership rates. I'll get to your POI in just a second. So we would actually argue that this increases wealth inequality and like the home ownership gap instead of decreasing it, because again, all of the money is going to flow to people who already own homes, and primarily the people who paid massive premiums and massive interest on those homes, right? Because just like it's proportionally based off of how much interest you paid on your home, which is going to be higher for people who are just like better creditors, and for people who are able, which I'll get to in a second, and for people who bought more expensive homes. So those people are going to make a lot of money or are going to be able to pay way less in taxes. And meanwhile, the only people who don't actually directly benefit at all from the home ownership deductible is naturally the people who don't own homes. I'll now take your POI.
All right. I'm just wondering, so who needs mortgages in the status quo? Is it rich people who can already pay with cash up front, or poor people who don't have the money and have to pay off it in like portions?
Going a little bit too far, that is irrelevant. What matters here is that this policy does not extend credit to low-income people who don't already own homes. All that it does is it lets people who already own homes get a tax break, and those people are going to be primarily, the people who get the highest tax break are going to be the highest income homeowners, the people who have the most expensive assets. So it's actually going to increase wealth inequality. Nobody pays for a house up front. Everyone always takes out a loan, so including high-income people. So because the opposition is essentially trying to tell you that only low-income people who can't afford out of pocket are going to take out a mortgage, and so it's really going to benefit them. But again, everyone takes out mortgages, even high-income people, because the fact of the matter is most high-income people right now make their money actually off, or high-income, quote-unquote, make their income off of asset appreciation, which they don't actually sell, right? So what they do is they take out debt with their assets as collateral and then go in on mortgages. So everyone takes out mortgages. High income, low income. This is not really going to help low income people. It only helps high income people. So the next thing they say is that low income people are more likely actually to get higher interest loans. This is actually not true. So let's go back to the 2008 housing crisis, right? Part of the reason this happened was because very poorly regulated banks did take out high interest loans on creditors they knew couldn't pay. Then all those people defaulted and the entire economy crashed. As a result of the 2008 recession, there are now much more stringent laws in place in terms of the interest rates that the people who are giving out these that the people who are doing these mortgages can give out to people who may be less reliable creditors, i.e. people who are lower income, right? So actually flip this. Lower income people are less likely to pay high interest rates. You can turn this point entirely, and the only people who will be paying high interest rates are the people who are, one, not considered better creditors generally, which are going to be higher income people, right? Just because they have like more assets they can fall back on. And two, people who are buying more expensive houses, which they don't refute, which again are going to be higher income people. So this only benefits the rich, does not benefit the poor. So their counterplan real quick, they say that they're not going to eliminate it entirely, they're just going to reduce it, and that this saves $319 billion. This is barely a third of the revenue that we save. And again, we point out to you that the primary beneficiaries of this mortgage deductible are the rich, so there's no reason to keep it at all. They don't even warrant why there's any reason to keep it at all, aside from the fact that it supposedly extends credit to low-income people so that they can take out mortgages, which actually is not true, as I've just decisively proven. So moving on to the government case. On this first contention about money for social welfare programs, the first thing they say is that it's actually not income tax, it's payroll tax. The answer to that is it's a little bit of both, but it's mostly income tax, right? Income tax, how you can warrant this is income tax is just a much larger base and has been around a lot longer than payroll tax. When you start looking at social welfare programs and the safety net, it starts to come around the same time as income tax. Payroll tax has only really been expanded in more recent years. So just like warrant that income tax is the prime payer for social welfare programs like Medicare that have been around for so long. So then they say that Congress has to appropriate the money for things like Medicare and Medicaid, and they won't appropriate it. So I want to point out that Medicare and Medicaid are actually what are known as mandatory programs, i.e. Congress is not consistently like appropriating more money to them every year. There's just like, there's already money going into them. The thing is, the mandatory rate has been lowered as a result of income taxes being so much lower because the government gets less revenue from income taxes, partially as a result of tax deductibles that only benefit the rich, such as this particular tax deductible. So you can warrant through that, less money is going to programs that can help people in need, programs like Medicaid, programs like food stamps, as a direct result of the government having way less revenue because of policies like these. Then they say housing is a prerequisite for good things, is support for minorities. Again, like we agree that housing is great. We just disagree that this is going to expand housing opportunity at all. Again, warrant that the only people who actually benefit from this are people who already own homes, right? And those are primarily going to be higher income people. The issue right now is that like people who own houses are getting richer and richer, especially the richer people who own houses, and people who don't own houses are getting not rich. I'm not taking a POI at this time. And so what you see is when you just only increase the wealth of homeowners, specifically high-income homeowners, you're actually going to like increase the wealth gap and just make things worse instead of redistributing that money into social welfare programs that help lower-income people way more. Housing might be a prerequisite, but having a house is different than housing as well. I also want to point out that a lot of low-income people go in for like apartments, right? And yes, we agree that rent is often not the best scenario, right? But rent is way, way more payable than a home. And also, we would actually argue like another point that we want to make here, is that if you don't buy that banks are not really allowed, or that banks never give high interest rates to potentially unstable creditors as a result of regulation, or if you believe that like it might still happen sometimes and those people might benefit from this tax deduction, what you must believe is that if a person does that, the money that they would save on the tax deductible is still going to be fairly marginal unless it's like a really expensive house, which you don't see a low income person buying or taking out a mortgage on. The money they would save from that tax deductible is going to be significantly smaller than the money they're paying in interest, which means that they're more likely to default on that home. So if anything, the only thing that this might do is encourage low-income people who might not be like super well educated in like really complicated finance to take out home loans that they can't actually afford. And if you don't buy that they can, then you do buy that banks are never going to give high interest rates to low-income people, which means that low-income people never ever benefit from deductions like these. Then on the next contention, they say that they won't build that many luxury houses because there's now a cap at 500,000, but the 500,000 is still pretty high, especially in Republican states like Texas, where often housing markets are lower, like Texas, like Oklahoma, like a lot of places in the South. That is still fairly expensive. Like those are the wealthy people in those states, or wealthy people will move to those states to buy those houses. So we don't actually think that this is going to decrease the luxury housing. Also, those are the areas that struggle the most with urban sprawl and the issues that we say here. And then they say people aren't influenced by deduction. What they basically say is that like people buy these these really expensive houses regardless of the deduction. But we agree that it's not like the primary mover behind anyone buying luxury housing. It certainly makes it better, right? And it encourages people to take out loans that they might otherwise not on luxury housing they can't necessarily afford, or that they're only going in on while they're rich. So yeah, it may not be the primary cause, but it certainly does increase demand generally for for really expensive luxury housing, which means that there's less demand and less supply for lower income housing that could actually be accessible accessible for low-income and middle-income Americans, which is the only real way to extend home ownership. It's a strong ballot for side government. Thank you for your time.
We'd like to thank the MG for their eloquent remarks and now call upon the MO for the final constructive speech of the round, not to exceed 8 minutes with 15 seconds grace. Hear, hear.
Thank you. My name is Katie Doran. I'll be the second speaker for the negative team. This speech, I'm going to go an overview, and then I'll talk about our disadvantage, our counterplan, and then my opponent's case in order.
Where do you want the overview?
I would flow it off to the side on the disad sheet if you have space.
Cool.
Okay. My time begins now. The most important impact in today's debate is home ownership. If we can increase the number of Americans who are able to buy a home and keep that home for generations, we'll be increasing their generational wealth and thus addressing the wealth gap that we see between homeowners now and the status quo and into the future. The wealth gap can shrink as long as more and more people are able to access homes, but my opponents make that infinitely harder. Let's break that down a little bit further. First, on our disadvantage on property ownership, we tell you about how housing is key to accumulating wealth and how many tax filers benefit from the mortgage interest tax deductible. But they tell you that the deduction does not help people, quote, save for houses because it only helps people who are already homeowners. Sure. However, that doesn't mean that it does mean that you don't have to save as much. It might not be creating wealth for you before you have a house, but it does mean that buying a house is more attainable because you know you don't have to pay as much money every single year on that house because you can't afford to pay lower interest rates, which makes it more attainable. Sure, you're not saving, but you don't have to. Sure, you're not like saving new money, but you don't have to save as much in order to buy that house in the first place. Then, sure, I'll take your question.
How much money? Oh, Rose, do you want to go? Okay. How much money would a low-income person save off of a tax deduction or mortgage interest deduction on like a less expensive house they might be choosing to buy?
Sure, a less expensive house, which they're paying high interest on, which an issue I'll get into in a second, could cost even them thousands of dollars of extra mortgage interest every single year. Thousands of dollars is the difference between it could be the difference between being able to feed your family for a few days or a few weeks even. Thousands of dollars is a lot of money, especially for the average American who doesn't even have enough money for like $1,000 emergency, right? Thousands of dollars is pretty significant. Okay, then my opponents try to make the argument that people are going to start taking out loans that they can't afford if we pass this policy, which is pretty contradictory because first they try to tell you that people aren't going to take out loans and aren't going to buy houses at all. And then they tell you that they're going to buy so many houses, they're not going to be able to afford them. These arguments contradict and you really shouldn't be buying them. Next, they tell you that the inequality is only going to increase because it helps people with bigger homes. This is an issue of the counterplan that I'll address more later on, but keep in mind that our counterplan lowers the threshold for like what kind of mortgages are going to qualify for this deductible, which means that if you're a rich person who has a home more than $500,000, our policy, if anything, is going to raise more government revenue from you while still making sure that other families still have access to housing and don't have to pay that tax rate. Then my opponents say that like everyone who buys a house takes out a loan and nobody pays it up front. But even if that's true, that still doesn't negate the benefit of the mortgage tax deductible, right? Like everyone still pays some amount of money up front, and that everyone still pays some amount of money on upfront as well as like some amount of mortgage and interest every single year. And if we're able to deduct the amount of interest you have to pay, that's a lot of money saved for your family. Okay. Then we make the argument, this is a pretty important argument in today's debate. We make this argument under a second link about how housing builds wealth. We tell you that this is especially important for people in poverty who are more likely to face high interest rates and predatory loans. Now, my opponents say that this is false because in 2008, that's exactly what happened. And because that led to an economic collapse, now there's more stringent laws about predatory like loaning. However, like even if you're not legally allowed to discriminate against someone because of what they do for work or what their race is or what their income level is, bankers still find ways around them, right? Like that's why we have things like credit scores, and people in poverty or people who are renting have way lower credit scores because they aren't able to build that credit because they don't have a house. That's why people in poverty, I'm not going to take a question at this time. That's why people in poverty still face higher like loans, because even though you might not be allowed to make that decision based on someone's income level, you're allowed to make that decision based on their credit score. And that credit score is always often going to be attached to their income level and their access to wealth. That's why people in poverty oftentimes this is like ballooning mortgages, right? Like that's why people in poverty still face higher interest rates, and that's why like a deductible on the interest rates you pay is especially important for people in poverty or people who are buying their first house. Also, you can consider that our counterplan increases deductions because it covers less people and makes sure that this benefit is flowing directly to people in poverty or first-time homeowners or people who own homes under 500K, which indicates that, again, we're helping these people to the largest extent. On the impact level, if you buy that we were winning the property ownership impact, then you must vote for the negative team in today's debate, even if you don't evaluate any other level of the debate. 3 reasons why the housing impact housing impacts come first. The first argument is that this is an internal link to the same impacts that they generate, right? Like they try to tell you that it's really important that people are able to put food on the table, that they have access to things like healthcare through Medicare and Medicaid. Sure, that's great, but even better is making sure that people don't need to be on those unreliable programs that are subject to budget cuts, as they themselves tell you in the first place. The only way for people to generate wealth and have true stability is for them to have access to home ownership, because that allows them to build up wealth throughout generations so that they don't need to rely on those programs in the first place. Their advantages are unimportant if we're able to solve for home ownership. But the second reason why this is the most important impact is that it's also the internal link to other benefits such as democracy and civil participation and civil involvement, right? Like Cheryl already reads you these arguments about how lawmakers care a lot more about their constituents that tend to own homes, as well as these people having more direct connections to Congress people, which means that it's the internal link to democracy as well. But thirdly and finally, you can also extend the argument about inequality. The average family's net worth comes from, or like home equity and retirement accounts together account for over 60% of the average household's net worth. And on top of that, homeowners on average have a net worth that's 80 times higher than renters. People are able to build wealth by buying homes. If we really want to address inequality, then we need to address the lack of home ownership among people in poverty or lower income people. Okay, next, on our counterplan, essentially you can extend over our argumentation as for how we lower the threshold as for who actually qualifies, which means that they're directing the benefits directly to people who actually need it, rather than the rich people who they say are harmed by the rather than the rich people who are like benefit off of this tax deductible right now. I'm not going to take a question at this time. I still have a lot to get through. Okay. They try to tell you that we only raise a third of the money that they raise, but even if that were true, that's not really important, given that it's highly unlikely that all $900 billion across a decade that they claim to raise is going to go to social welfare in the first place, if any of it goes to social welfare at all, as we'll get into in a second. They try to tell you that there's no reason to keep this loan at all. There's no reason to keep this deductible at all. There absolutely is. People who are buying homes for less than $500,000 should have access to home ownership. They should not feel as though they have to rent for the rest of their lives or for generations into the future, because this tax deductible that a few thousand of up to $5,000 or $10,000 a year is like becoming the barrier to buying a home.
Also, they say that $500,000 is like a lot of money for a luxury home, but the housing crisis is in like urban areas.
Yeah, the housing crisis is especially in urban areas, which means that like in urban areas, that's where houses tend to be so expensive in the first place. Like in the rural areas in the Republican states that they try to talk about, that tends to be the places where there's a lot of land and thus more ability for development, which means that houses are cheaper, and like the housing crisis isn't really happening in that area. Those examples aren't super relevant. Okay, next on the argument about giving money to social welfare. Three key issues here. The first issue is that these are funded by the payroll tax, not the income tax. Now, my opponents try to tell you that like it's funded a little bit by both, but mostly by the income tax, because the income tax is what's been increasing in the past. But even if that's true, like these policies have existed for a significant amount of time. You can't say that just because the like income taxes have increased recently that's where their funding has come from, because these policies have existed for so long. But even so, there's really no way to confirm whose source is right. So I'd ask that you don't evaluate this argument on the payroll versus income tax argument. But secondly, you can also extend Cheryl's argumentation about the massive deficit right now and how you can't create, like, people aren't going to be spending new money. They're just going to be using this money to pay off the deficit, especially because a lot of Republican lawmakers are really concerned about it. The fact that minimums have decreased recently, as they themselves argue, show that there's no willingness to increase the deficit right now. Next, so you can extend our argument. I'm not going to take a POI at this time. Next, you can extend our argument about how in 2017 there was a decrease of the threshold for who was eligible from $1 million mortgages to $750,000 mortgages, and the money that was gained from this policy did not go to social welfare. Even the Democratic Party and Biden right now in the status quo have not increased funding for social welfare, which shows that there's no interest in increasing the amount of funding, even if we increase the amount of money that's available. This warrant about 2017 goes completely dropped. Don't let them respond to it in the future. Next, they talk about how the deductible encourages expensive houses. I've already shown you how this is only really relevant in urban areas, which means that it's not really contributing to like luxury houses in these Republican areas that they talk about. But moreover, like you can extend Cheryl's argument about how the deduction is not enough to make people buy luxury houses, because they still have to pay money up front, and like the deduction itself is not going to be the one thing that makes people build super expensive houses, especially because these expensive houses are still going to be covered under the counterplan, and our impacts are more significant anyway.
We'd like to thank the MO for their eloquent remarks and now recall upon the Leader of the Opposition to deliver the first non-constructive speech of the round. And the dais wishes to remind you that while new examples are certainly welcome, new argumentation is not, and we'll be taking all points of order under consideration for each of us individually during our various decision-making processes. With that, the LO.
You're muted.
Sorry. Okay. The AF loses because they massively undercover our counterplan, which we apply to basically all of their arguments, saying how not only is the counterplan the internal link to their impacts, but also solve for all the harms they talk about how these deductions are going to overwhelmingly like middle class and upper class families, and how there's not enough money going to like other social welfare programs, etc. But I'll go into the counterplan later. But either way, their entire their entire narrative of like the housing market and what happened in 2008 is a lot of parts of it is misconstrued, and there's like a lot of logical holes. Like, first of all, the fact that they even say that like unemployment and food stamps, that type of stuff, is from the income tax is like completely false. That's from the payroll tax. Also, the fact that somehow like reducing the amount of money that it costs to pay for a home won't actually encourage low income people to buy homes. Like, obviously there's a lot of like holes which you should be like noticing throughout their last speech. But either way, the biggest impact in today's round is that of home ownership. Home ownership is a prerequisite to all other impacts, because would you rather have like be allotted a certain amount of food stamps for your family, which are barely sufficient enough to eat, and also these food stamps won't even exist under the affirmative plan anyway, but would you rather have food stamps even if you grant them that link, or would you rather have home ownership? Home ownership is the most effective way to generate wealth, and this is an argument they conceded out of my first speech, because over your lifetime, your house can double or even triple in price, especially if you are in these urban areas, which Katie isolates is where there is the urban housing crisis, and that is where these homes are selling at ridiculous prices for very small lots of land. Either way, as I was saying, home ownership is the surest way to create wealth, and it's the biggest investment that you can surely rely on, right? And for that reason, our impacts are all prerequisite to theirs. So whatever they talk about Social Security, et cetera, is irrelevant. But either way, if we go to the counterplan only has a risk of solving, given that their food stamps argument is completely irrelevant, because Congress, they can't fiat that Congress is going to appropriate whatever money they want to spend. And given that these food stamps are not even from the income tax, this argument is irrelevant. It's all about housing, right? So the counterplan only has a risk of solving. Their arguments are all defensive. They're saying, actually, this is going to increase like wealth inequality. We tell you, not only does our counterplan decrease it, but even if you buy their argument, even if we give money to wealthy families, we still have a risk of at least giving money to poorer families. As Katie said, it's only logical that if you reduce the upfront cost for families to buy their houses, then more families are going to be buying houses. So we only have a risk of giving minorities and giving low-income people who are already suffering from cyclical poverty because they don't have generational wealth creation, a chance of being able to like give their family a good education, a crime-free neighborhood, things like that, right? This is the surest way to do that. And we only have a chance of solving. All their arguments are defensive. But moreover, they talk about the housing crisis. And this is something I really want to clarify. The housing crisis was nothing like the deductions. We've had deductions for like decades now. And that is not why the housing crisis happened. That was because of mortgage ballooning, in which we gave random people mortgages, not looking at their credit score. And then everyone defaulted on their mortgages and their loans. That is not what's happening here. We're giving people deductions. There still exists credit. So that doesn't mean that poor people are going to all of a sudden like going into the richest neighborhoods buying $1 million homes, because they can't do that in the first place if they don't have the credit. How do we build credit? Buying a home. Buying a home is a great way to show that you're capable of dealing with such a big investment. And this is especially key for low-income families because of the fact that they have to pay such higher interest rates because of these like biases against lower-income people. And we're going to be reducing that. And moreover, something they also don't respond to is the fact that the counterplan increases the amount of deductions that these people receive. We will lessen the pool of people who are receiving these deductions in the first place, so rich people won't be getting it. But moreover, that means that the poor people who are going to be using this money and who are suffering the most from the urban housing crisis are going to be getting more money. So even if they say it's negligible right now, it's going to increase dramatically. But moreover, like this is far preferable to renting, because through renting you're gaining nothing while interest rates go up and your like income remains the same. Ultimately, housing is far more preferable to all other options. For this reason, it's a clear negation ballot.
We'd like to thank the Leader of the Opposition for closing the op bench, and now recall upon the Prime Minister to deliver the final speech of the round, not to exceed 5 minutes with 15 seconds grace. And the same warning that was applied to the LO applies here in terms of new argumentation. Hear, hear.
Okay. The mortgage interest deduction is a program that benefits middle and high income homeowners at the expense of true low income people, because it isolates them from the housing market and it takes away money from their social welfare programs. Before I get into my two voters, I want to illustrate a little bit what the counterplan and plan actually does. So under our side of the House, we are completely eliminating this, whereas they're doing it for like until $500,000 or something. $500,000 is still a luxury home in the majority of states. I just want to clarify that before I get into my voters. Now, into my two voters. The first voting issue is access to homes, and the second is social welfare programs. Let's talk about access to homes. We tell you that this credit incentivizes the building of more luxury homes because it increases the demand to build larger houses. This is because when people take out larger loans, they have more interest and they get to deduct more from their taxes. So even with the counterblame, we say that this incentivizes the building of housing that is basically as close to $500,000 as possible. And like in states like Texas and Oklahoma, these are literally like mansions and luxury housing in basically anywhere that isn't the Bay Area or New York City. And this causes the market for small homes to be smaller because housing developers are trying to compensate for this demand. They know that most people looking to buy a house are going to think, how far can I push it? What is the most luxury home that I can possibly buy with a down payment that I can still afford? And that is the market that is compensated for. People are building large homes. So this is the main reason that most low-income people never become homeowners. This is the reason that like over half of, or like most low-income people like never ever become homeowners in their life. Now they say that this gives more access to the housing market because of the tax deduction. However, we just think that this is a huge logical jump. The biggest barrier for most people to buying a house is the down payment. This is what people save up for. So this doesn't necessarily incentivize or enable more home ownership. It just makes it easier once it happens. It doesn't help people with their down payment. That's the biggest barrier. After the down payment happens, people have to pay their mortgage, whatever. And this is what this deduction helps with. It doesn't help with the down payment. So it doesn't like increase the amount of low income people that can buy houses if it doesn't like make it easier for them to pay the down payment. So basically what you can see is that when it comes to access to buy houses,
So you make the argument that low-income people aren't going to be buy houses, and you say that time again, but you don't make the argument is the reason being that the down payment is the biggest payment, which is something that an obstacle that they can never overcome. Like that reasoning and articulation was never made.
I think the argumentation that the mortgage doesn't like have to do, Kai, help me out here if you can, that like the mortgage is not the biggest barrier and that this doesn't incentivize home ownership among low income people is like something that was a big, like basically the biggest response to your first disadvantage.
Can someone just point to it on the flow or like tell me where to look?
The second response to the first disadvantage, I think, is mortgage interest deductions only apply to people who are already paying the mortgage. If you haven't like gotten your house already, this doesn't apply to you.
Okay, panel will take it under consideration. Thank you.
Okay. So basically, we tell you that this simply isolates low-income people from breaking into the housing market in the first place because it disincentivizes the construction of smaller homes that they could actually afford. So when it comes to wealth building, for actual low-income people, for people that have failed to penetrate the housing market thus far, we say that the mortgage interest deduction is a bad thing. Moving on to the second voting issue of social welfare programs, we tell you that social welfare programs in the US have a lot of potential, but they are basically inadequate. And if you got a $900 billion injection from eliminating this program over the next decade, this could largely help these social welfare programs better meet people's needs. Their only response here is that it won't happen. However, there's a few things wrong with this. The first is that the president can easily expand these things through executive action. Our plan is as soon as possible, and like with the Biden administration, this will likely happen. The second thing wrong with this is that like when more money is made from taxes, these programs, like they just have the potential to have more money. It's a lot more easy for Democratic lawmakers to
The argument about executive orders is entirely no.
That
executive ordering, like that articulation was never made.
The argumentation that executive orders can expand programs, like welfare programs, was made in response to your argument about Congress appropriation, I think. So,
Judge's discretion.
Okay, panel will take it under consideration. Thank you.
Furthermore, it simply just allows Democratic lawmakers and people who want these programs to expand to be able to leverage more funding to them more, because the government is bringing in massive swaths of new money. So basically, you can see that low-income people are better off with the elimination of this program, because it allows them to more easily penetrate the housing market, because there's not this inflated demand for luxury housing, and because these social welfare programs are so much better off with the elimination of this program because of the injection of money that it puts into the government. So you should be prioritizing low-income people in this debate round. The mortgage deduction does not help people actually pay a down payment. It only helps them once they actually have the house. And all it does is isolate people because it incentivizes the building of luxury housing overall. So for all of those reasons, I urge a government ballot. Thank you.
Here, here, I urge both teams to cross the ethereal aisle and shake hands. If that's still a thing that's done in high school, I'm sure that's been canceled for some reason or another. With that, the panel, are people back? AJ, are you here?
Yeah.
Okay, cool. And I see Kai, I see Katie, I see Cheryl, and okay, we are all here. I am glad. Congratulations to both teams for making it to this year, the semifinals of the name of the tournament, the NPDL Tournament of Champions. Huzzah. I'm going to announce the decision, and then we will progress from there in the normal order. So the decision is a 4-1 in favor of the government. So congratulations to Berkeley for advancing. Congratulations to Menlo-Atherton for making it to this year, the semifinals. This is in many ways a cruel tradition, but it's a tradition nonetheless. So I will invite the squirrel to go first. So AJ, that's you.
That's me. I'm the squirrel. All right. So I was the one who voted for the op. Great debate, everyone. This was very close and took some time to adjudicate. Though I will say it's an interesting, I guess, thought experiment to live in this world where we're choosing between luxury home creation and food stamps. These things to me are on the very opposite ends of the financial spectrum, but here we are. So ultimately, what this came down to for me is who has the biggest access to home ownership. I think both sides agree that upfront costs are going to prohibit a lot of folks from owning homes, and neither side is able to solve that. Like, that's fine, that's a wash. A key argument coming from the op, though, is that credit score is also a key way people are prohibited from home ownership in the status quo. And even without this benefit, like, you wouldn't be able to solve for the fact that people can still be discriminated against on that front. And that at least by trying to like redirect the benefit of the mortgage interest deduction to the lower and middle income folks, it can help people have a lot of better equity, get a better credit score, and potentially buy a home in the future. On the next on the idea of the demand for luxury homes, I think that the counterplan does enough work to solve this by kind of redirecting the benefits here by capping the demand at 500K. So what I think I would have needed to find this argument to be much more persuasive on the government side is argument not only that even if the status quo pushes demand for these super high-end things, which I think, I don't know, I live in Chicago, man, homes here are fucking bonkers, are very expensive. So 500K feels like a lower bound. That aside, that didn't factor into the decision. I don't think everyone is from Chicago. What I would have needed, though, is proof that the demand not only would have lessened in terms of demand for the luxury homes, but would have actually shifted to more affordable housing for the people that you say you benefit. And then lastly, on the idea of the social benefit program, one, I think that the POO about the executive order, I think that that was new in the PMR. So that didn't flow through for me. And then the good argument that we do get in support of this for the MG is that a lot of these programs are mandatory. So the funding with them directly is proportional to the income raised. Yeah, that's true and is generally conceded. I didn't consider the payroll versus income tax, but I don't think that that's true for all of the social programs that you would claim to have. So for those reasons, this was not ballot for me, but I was the squirrel. So I look forward to hearing from what the rest of you thought. Sorry for my language earlier.
Does anyone have a burning desire to speak first? I'm more than happy to. I just don't want to. Okay. This is a confusing round. I think it's a confusing round because what we mean by low income is a complete moving target over the course of the round. Is what we mean by low income someone who can afford a $500,000 or a $300,000 house? Or is what we mean by low income someone who cannot pay for food and requires food stamps? Unclear. Those two groups seem to be largely the same in the context of the round. I think this just creates a lot of confusion generally, but in terms of the weighing, I think I agree with the weighing that I get at the bottom of the MO, which is ironically more convincing weighing than I get from either of the rebuttal speeches, which are 3 reasons as to why I should prefer home ownership as the most important issue. 1, I get a path dependency argument. 2, I get this like civil representation argument, which is sort of under impacted ? And 3, I get an inequality argument, which is also under impacted. Unclear why I care about inequality. Great. Seems like the first path dependency is somewhere reasonable. I think then the question becomes, how do we affect home ownership rates? And I think Gov gets away with highway robbery here. And what I mean by this is the Gov claim is that there's going to be no home built, or the rate at which homes are built that are below $500,000 is really small. I think we can all acknowledge that this claim is prima facie false for the reason that Gov gives us, which is that supply is in some way linked to demand. So if you have $300,000 to get a house, that house will exist. But this is the claim that we get from Gov, and it's not really convincingly beaten. The counter argument I get from OP is that the amount of money that you're able to save as a result of being able to pay, able to deduct your mortgage payments means that the amount of money you have to save in order to purchase a home is less. This is the overview that I get at the top of the MO. The unfortunate part here is I think that if the home still costs $500,000, unclear why like the small amount of delta in terms of the money you need to save matters, because the thing that matters most is the down payment on the home, which is the argument that we get from Gov bench, and I think also exists on op bench. Like even if there's some small delta in terms of the mortgage, deduction rate, probably still the biggest thing that you care about is the down payment. So I think that's probably pretty convincing, just in terms of the only way you access home ownership is if you have less expensive homes being built, which you only access on Gov's side. I'm not entirely convinced I want to vote here because I don't know whether like this argument meets the burden of proof coming out of PMC just because of like this knife that is intrinsic to it. But I think that insofar as there's no particularly convincing op, I buy it. The social program stuff falls out of the round for me because I just think op is true, which is that Republicans aren't going to pass any of this. I completely agree that the point of order in terms of presidential privilege is blatantly new. And I think that the second response that I get out of op is with regard to the deficit spending and how you're going to spend on the deficit first, which I think is also probably true. So that falls out of the round. And I think the CP, I don't know. I think the CP did a lot to like confuse the round, if I'm being perfectly honest, because it just means that both sides are stealing offense from the other side. And it's like, who actually has offense here? But I think that what I would say on it is, I think this is an example of like just people not really understanding like income inequality in this country, because $500,000 is still an expensive house if you leave New York City or you leave Chicago or something like that. And I think that there's some characterization from Gov on that, but I also just don't think that answers like just the basic supply demand argument in terms of home ownership. I think that this is a really easy round for op to win with some sort of straightforward responses to Gov's second point, which I think is sort of expertly brought back in PMR and weighed pretty effectively. And I think that's what gives Gov the ballot. But I was 100% convinced I was voting op until about the 4th minute of the PMR. So I think that's my RFD.
I agree with a ton of what you just said, Rada. And I was definitely voting op until PMR said the words, the reason people saved is for the down payment. And then I was like, oh, shucks. So I think op builds a bear trap of a case, and where they really, really prove that home access is the most important thing around for a lot of the reasons Rada said. But I think ultimately they only have like 2 tiny links into how they actually fulfill that. And so I think Gov is winning there. So I generally agree that all of the savings that op talks about from the deduction only end up accruing to people who were already approved to own a home in the first place because of the PMR line about the down payment being important. The argument is new called, but I think it's enough in MG and also enough responsive to the new MO analysis that it's fine. The second link into homeownership that matters is the one that Gov provides, which is for luxury homes. I agree with AJ that this was super mitigated by the counterplan. I just think that it has some ability to provide some offense because the PMR articulation is that people will still try to buy the most luxury homes possible. Rod is right. This isn't actually true macroeconomically, but it is true on the flow. And so I have to use it in the round. So I think that homeownership access increases a little bit because of this mechanism, but not at all for the previous mechanism. And then in addition, I think you have more taxes for some social welfare programs. I think OP has defense for why it won't be a lot of money or whatever, but I don't think any of that is terminal defense. It's just mitigation on the fact that you'll have some more money for social welfare programs. But even if it is terminal defense, I don't know why spending to alleviate the deficit is bad. So even if OP is right that you're spending the money to pay back the deficit, that is still a benefit that Gov is getting. So I think Gov gets more homeownership, which is the most important thing around, and then an additional advantage is the deficit or whatever. I think in terms of feedback, the only things I point out is firstly, when you're providing a lot of weighing for why, something is the most important, just build lots of strong mechanisms in how you actually get that argument. And then secondly, something I've noticed is I think that everyone in the round is talking about the least well off, and I think that's a super important thing to do in debate. But I think that there are arguments they give for if you make the real estate sector more accessible for even the middle class and the average family, that creates a stronger economy that will then in turn also help the least well off. So you all can also mechanize it into that same impact from the opposite direction. Those are my thoughts. Really appreciate the round, and congratulations for getting to semifinals.
I'm happy to go next. I don't think I have a ton to add here, but just want to echo congratulations that you all have made it to semifinal rounds, especially during a Zoom tournament. When I was debating, these definitely were not the norm. So congratulations, everyone. I think similar to other judges, the point really came down to me on the significance of the tax deduction on access to home ownership. I think that this was a point that Kai articulated very well and Natalia really drove home. And that was the turning point in the round for me. I think that I did buy Gov's point that it was a good thing for more money to be in the coffers of the government with the probability that it would go to social programs. So I bought that impact. However, given the significance or the insignificance of the tax deduction on access to home ownership, I did not buy your second point about improving the earth or improving the housing stock. And also given that point, I did not buy OP's points about wealth creation or stronger democracy. I felt that the link there was not as strong. So that was my reasoning. I'll leave you all more detailed feedback in the ballot, but overall, really good job, everyone. I thought this was a very thoughtful and nuanced debate.
Co-sign what the three other judges who voted Gov said. Just two very minor things to add. I think that the main question, I agree, the stuff about tax revenue and its impacts on social welfare programs, entitlement spending, et cetera, fall out of the round. I don't see a ballot there. The question to me is primarily about whether the solvency is more on the housing supply side or on the ability to buy houses side. I think that Gov does a pretty good job of convincing me that the solution is more a question of supply, and that in some way, shape, or form, the existence of the existence of the mortgage interest tax credit artificially inflates prices, distorts the market, et cetera. One thing on OP, I think that when I heard the counter plan, I was like, damn, wish it would have been a little different. And the reason I say that is I think that Gov was able to really beat back a lot of the counter plan by illustrating the vast amount of marginal value of a dollar in different parts of the country, because there's so much variance in cost of living, there's so much variance in cost of homes, et cetera. And so I was hoping for a counter plan that was a little bit more, maybe to the extent of the threshold will be something that is indexed to some sort of percentile relative to the surrounding community or the area, and it wasn't just this kind of blanket catch-all solution. I think that OP would have been able to access substantially more offense and could have gotten out a lot of the traps about like who it actually helps and who it doesn't help if there had just been a little bit more nuance in the really different geographical market dynamics of housing. But as everyone else said, congratulations on making it to semis. Hope that y'all are like having fun, and thanks for a great round.
Thank you so much. Really appreciate it.
Yeah.
Thank you all for the feedback. Good luck in finals.
Thanks. Y'all are great. Bye.
Debate. Thank you so much. Yeah. Oh.
Recording stopped.